Welcome back to the channel, everyone. Today we're discussing one of the most talked about topics in the investment world. Is Bitcoin a safe investment in 2025? Bitcoin has had an incredible journey since it first launched in 2009, but as it matures, the big question remains, is it safe for investors moving forward? In this video, we'll cover the pros and cons, analyze how the landscape is evolving, and try to answer the question of whether Bitcoin can still be considered a secure, viable asset by 2025. Let's jump right in. 1. Why Bitcoin might be a good investment in 2025. To understand whether Bitcoin is a safe investment, let's start by looking at the factors that make Bitcoin attractive. Bitcoin as a hedge against inflation. One of Bitcoin's biggest selling points is its potential to act as a hedge against inflation. Inflation, the gradual increase in the price of goods and services, often erodes the value of traditional currencies like the US dollar, euro, or yen. Over the past decade, central banks have printed massive amounts of money, especially in response to the 2008 financial crisis and the COVID-19 pandemic. With government spending at record highs and the printing of fiat currencies increasing, many investors are looking for alternatives that maintain value over time. Bitcoin, with its fixed supply of 21 million coins, is deflationary by design. No more coins can ever be created beyond this cap. This limited supply makes Bitcoin similar to precious metals like gold, which have long been seen as stores of value during times of rising inflation. In 2025, if inflation rates continue to rise due to increased government spending and loose monetary policies, Bitcoin could become even more attractive to investors looking to preserve their purchasing power. Institutional adoption and mainstream integration. The past few years have seen unprecedented institutional adoption of Bitcoin. Major corporations like Tesla, MicroStrategy, and Square have purchased significant amounts of Bitcoin as part of their corporate treasury strategies. This has changed the game for Bitcoin, moving it from the fringe of finance into the mainstream. By 2025, we can expect this trend to continue as more financial institutions embrace Bitcoin as a legitimate asset class. Companies like PayPal and Visa are already integrating Bitcoin into their payment platforms, allowing millions of users to buy, sell, and hold Bitcoin with ease. Furthermore, Bitcoin ETFs, exchange-traded funds, have been launched in various countries, making it easier for both retail and institutional investors to gain exposure to Bitcoin without having to worry about the technical aspects of storage and custody. Institutional investors, such as pension funds and hedge funds, are increasingly including Bitcoin in their portfolios as a way to diversify risk and hedge against traditional market volatility. Bitcoin's global, decentralized nature. Unlike fiat currencies, which are controlled by central banks and governments, Bitcoin is decentralized. No single entity or country can control the Bitcoin network, making it resistant to censorship and manipulation. This decentralized nature makes Bitcoin attractive, especially in regions with unstable currencies or restrictive government policies. By 2025, Bitcoin could see increased adoption in developing economies and politically unstable regions where citizens seek alternatives to government-controlled currencies. We've already seen countries like El Salvador adopt Bitcoin as legal tender, and other nations with struggling economies or hyperinflation could follow suit. Bitcoin's borderless nature means it can be accessed and used anywhere with an internet connection, giving it a global reach that fiat currencies simply can't match. This opens up opportunities for financial inclusion, allowing millions of people who are unbanked or underbanked to participate in the global economy using Bitcoin. Number 2, the risks of investing in Bitcoin. While the potential for Bitcoin to succeed in 2025 is significant, it's essential to recognize that Bitcoin also comes with several risks. These risks are important to understand before making any investment decisions. The roller coaster of Bitcoin prices. Bitcoin's price volatility is one of its defining characteristics, and it remains a significant risk factor. Over the years, Bitcoin has experienced massive price swings, and this trend is likely to continue in the future. In 2021, for example, Bitcoin hit an all-time high of nearly $65,000 in April, only to crash to about $30,000 just a few months later. This kind of volatility can be hard to stomach for investors who are used to the relatively stable price movements of traditional assets like stocks and bonds. If you're considering investing in Bitcoin, it's essential to be prepared for these large price fluctuations. Regulatory uncertainty. Bitcoin's decentralized nature makes it difficult for governments to control, and that's precisely what has led to regulatory uncertainty. In some regions, governments are embracing Bitcoin, while in others, they are actively trying to restrict or ban its use. For instance, in 2021, China banned cryptocurrency mining and transactions, causing a significant drop in the global Bitcoin hash rate and affecting prices. By 2025, new regulations could be introduced that impact Bitcoin's value and its ease of use. Governments might impose stricter taxation policies, transaction limits, or require more extensive reporting for Bitcoin transactions. On the other hand, clear regulations could provide a framework for Bitcoin to thrive and gain broader acceptance, but the uncertainty around this is something investors must consider. In countries with authoritarian governments or strict capital controls, Bitcoin could face additional regulatory hurdles, which could affect its market value and liquidity in certain regions. Security risks. Safeguarding your Bitcoin. Bitcoin itself is secure due to its decentralized nature and robust cryptography, but the responsibility of securing your Bitcoin falls entirely on the individual investor. If you own Bitcoin, you are responsible for managing your private keys, which are needed to access and control your coins. Losing your private key means losing access to your Bitcoin forever. There is no central authority to recover lost funds, which makes proper security practices absolutely essential. In 2025, while the technology for securing Bitcoin may improve, human error and hacking attempts will still be major risks. Additionally, cryptocurrency exchanges and wallets have been frequent targets of hacks and scams. Over the years, several high-profile exchange hacks have led to millions of dollars worth of Bitcoin being stolen. Investors should always prioritize using reliable exchanges and cold storage wallets to protect their holdings. Environmental concerns. Bitcoin mining is often criticized for its high energy consumption. The process of verifying Bitcoin transactions, called proof of work, requires miners to use substantial computing power, leading to concerns over its environmental impact. In 2021, studies estimated that Bitcoin's energy consumption rivaled that of some small countries. By 2025, the issue of Bitcoin's environmental impact may either be mitigated or become a significant obstacle. There are ongoing efforts to make Bitcoin mining more energy efficient through the use of renewable energy. Countries with abundant renewable resources are becoming hotspots for Bitcoin mining operations, and companies are actively seeking ways to offset the carbon footprint associated with mining. 3. Should you invest in Bitcoin in 2025? So, is Bitcoin a safe investment in 2025? Long-term vision and risk tolerance. If you believe in the long-term potential of Bitcoin as a store of value, hedge against inflation, and decentralized financial asset, it could be worth considering as part of your investment portfolio. However, volatility remains a significant risk, and Bitcoin may not be suitable for all investors. Bitcoin has shown incredible resilience over the years, but it is not without its challenges. Investors must be prepared for short-term fluctuations and must have the ability to ride out bear markets if they choose to hold Bitcoin for the long term. Diversify your portfolio. Bitcoin is often seen as a high-risk, high-reward asset. For those interested in adding it to their portfolio, a balanced approach is key. Rather than putting all your investment into Bitcoin, consider diversifying into other asset classes, such as stocks, bonds, or real estate. This can help manage risk while allowing you to benefit from Bitcoin's potential upside. Do your research and stay informed. As with any investment, it's essential to do your own research. Understand how Bitcoin works, the risks involved, and the global landscape that could impact its price and usability. Keep an eye on regulatory developments, technological advancements, and macroeconomic factors that could affect Bitcoin's value. Bitcoin's potential as an investment in 2025 depends on a range of factors. Its role as a hedge against inflation, growing institutional adoption, and technological advancements make it an attractive option for some investors.